So in this video, I want to talk about the rubber band snap trading strategy and what's going on behind that. So just little bit of background. When I started trading, I used to make a lot of losses. Not because I was not in the right direction of the market. I used to know that if the trend is going up, I used to go in the right direction. But what used to happen was that price used to correct. I used to hit my stop loss and I used to exit the trade in a loss, increasing the loss every day in my account. And when I used to come back to my screen an hour later, I used to find that actually I was in the right direction. And if I stayed in the trade for a little bit longer and didn't keep a stop loss, I would not get stopped out and actually make a good amount of money. So, what am I talking about here? Let's look at the example of Facebook. A lot of traders, what are doing right now is we see an increased volatility around here and we start buying at around this region to take advantage of that increased volatility, and let's say around $210 per share, we get a good movement, a little bit movement, and we're anticipating a much more movement, but price corrects and we hit our stop loss, we get stopped out. And when we come back to the screen a couple of hours later, a couple of minutes later, price actually went up, and we would, if we had not set the stop loss or we had taken a better entry, we would be in a very good profit. So this is the background of what I'm telling you and how to not hit those stop loss much often. So whenever we analyze a chart, whatever time frame it is, doesn't matter. You should always make your area of value. In the previous video of price action trading, I talked about area of value market structure. So always you can have a look at that. So in the charts of Facebook, I know I have an upward trending support line, and that's my area of value. So whenever the stock comes in this region, it always bounces back up. So if you had drawn this trend line, you would know the best time, the best place to buy Facebook in the 15-minute chart during this time frame would be around the support levels. So what we traders are doing, as I discussed, we are buying somewhere around here. When the breakouts are happening, we want to come in the trade to get that profit, but that really doesn't happen because we have a good consolidation. And whenever we buy around this time, for example, let's say at 212.6, so we'll have to have a very big stop loss and target remains small. So we have a target till the 214.7, but the stop loss is really big. So we have a 0.65 is to 1 risk reward ratio, which is really unfavorable for traders. If I don't keep a big stop loss, if I'm entering here, so I have to keep it below my trend line. That's a basic. If I keep a tight stop loss in this area, I would be just hitting my stop loss, as you can see, and I would be getting stopped out of the trade, as I discussed earlier. So there is no point of entering the trades in this area at all. So what am I suggesting? Whenever price is away from the area of value, whenever your price is far away, you don't enter the trades, because when you enter the trades when price is far away, price will always snap back. This is called the rubber band snap. It will always snap back to your area of value and bounce from this level. So similar was the case over here. If you had bought your stock at 213, price did go up a little bit, but then snapped back immediately to the area of value, hitting your stop and moving back up again. So we have to avoid trading when we are very far away from the area of value. So I am suggesting that whenever you enter a trade, buy somewhere close to the area of value so that you can have a very tight stop loss. So in this case, if I'm buying at this point, my stop would be like at this levels, my previous support. That can be a stop. My target remains same. So in this example, I'm doing a 1.93 to 1, close to a 2 to 1 risk reward. And this is much better as compared to the trade I was taking back then. So this is something that teaches us about patience. So we have to be really patient when we are trading. So always find an entry using your candlesticks near your area of value, so that we are not victims to the rubber band snap. So you are always on the right side. You know the trends are up, but always by near the support, so you can take advantage at the right time. Let's have a look at a couple other examples. In this example, I was using the support trend line. Sometimes, in stocks, so you can also establish your support or resistance using the moving average. In a lot of examples, in a lot of stocks, sorry, We see that stocks are respecting the 50-day moving average. In a lot of stocks, they respect the 20-day moving average. So whatever works best for your stock. So in this case, I'm looking at Reliance. It's the 1 hour chart. So we can see 50 moving average, the black line, is being respected a lot by Reliance. So we can see a good area of value in this zone. We can see a lot of testing happening here as well. And at the same time, we can see another good support being found at this region. So if you are buying Reliance, you need to buy at the support, the 50-day moving average. And we should not try to buy in this zone because we are too far away from my the area of value. And whenever you buy in these zones, we are just getting stopped out, and the stop has to be really big. If we are buying it, the stop has to be really big, much below, and the target, in these cases are much less. So again, giving us a very bad risk reward. So avoid that. Try to buy at the support, at the trend line, at your area of value, so that stops can be tight, targets can be big, and you can have a really good risk reward. So this was an example of Reliance Industries. Let's have a look in Forex. I'm looking at the charts of USD INR on the 5-minute time frame. So what is really happening here? We are getting tested. The 20-day moving average is being tested here. So if you look in this example, 20 DMA is tested here. We are testing 20 DMA over here again and over here again. So that's your area of value. So whenever you're looking at buying, you'll be buying at this point so that your stops can be really low and your targets can be really high so that you can get a very good risk reward. At the same time, if we buy, very far away, we'll be victim to the rubber band snap. Even though we're moving in the right direction, the trend is up of the USD INR. We're going to make a good high in the coming sessions. But time value of money is really important. We don't want to enter over here, just for the volatility, and we'll actually lose a lot of time value, and we will lose our patience, and we'll actually hit our stop loss, exit the trade. So try to buy as close as possible, and that is something what I'm suggesting to you traders. Be a little more patient when you enter into trades. Always have the correct levels. Don't just jump in based on news or based on some calls given by brokers or whatever they are. So always use your own analysis and use this methodology to, turn into your skills, your profits in the next coming sessions. All right. Thank you.